Hey guys, hope you're having a great day. Your buddy Tim back with another video in the conference room today because the weather outside is frightful. Oh, the weather outside is frightful. It's 100 degrees with rain. Sorry, you can see why I'm a realtor, not an entertainer. But hey, I wanted to do a really quick video for you because I've gotten a couple of questions on a statement that was put out about a week ago from Lawrence Yoon, I believe is how you pronounce his name. Lawrence is the National Association of Realtors chief economist, and he is the guy that watches the economy and the Fed and all the numbers for the National Association of Realtors and comments appropriately. I'm going to pull this up on the screen. This is from June 15th. Lawrence said, today's announcement by the Federal Reserve set a big increase in interest rates and means several more rounds of rate hikes are on the way in upcoming months. So far, the short-term Fed funds rate that the Fed directly controls has risen by 175 basis points, but the 30-year fixed-rate mortgage has risen even more by nearly 300 basis points. Now, here's the important part of what Lawrence is saying, okay, because this comes down directly to the math and how much you can afford to spend on a home. The 30-year fixed-rate mortgage has risen even more by nearly 300 basis points. On the same $300,000 mortgage, the monthly payment has risen from $1,265 in December to nearly $1,800 today. Wow, think about that for a minute. December, just 6 months ago, if you needed your house payment to be $1,200 or so, you could afford a $300,000 home. Well, now, 6 months later, that same $300,000 home is going to cost you $1,800 a month. It's a $600 a month jump. That is a lot of money for most people. You know, if you look at it broken down, back in December, you were going to pay about, what, $400 for a month for every $100,000 borrowed, when now you're going to be paying $600 plus. So again, that is quite a jump. Lawrence went on to say home sales have recently been trending down towards 2019 figures. Sales could fall even further with some inventory sitting on the market for more than a month like in the pre-pandemic days. Pricing a listed home property properly will therefore be the key to attracting buyers. This is for you agents out there. In the meantime, rental demand will strengthen along with rents. Only when consumer price inflation tops out and starts to fall will mortgage rates stabilize or even decline a bit. That is why providing additional oil supplies will be critical in containing consumer prices and interest. Okay, we're not here to talk about oil. We are here to talk about houses and home mortgages. So again, the bottom line of what Lawrence is saying is that you are going to pay a lot more today for money than you would have 6 months ago. What does that mean to you, the home buyer? Well, you may have to adjust the price of the home that you're looking to buy. I'm seeing this here in our business here at Revolved Realty. Interest rates are forcing buyers to step back, take a look, reassess, and see what they can afford. I have clients myself who had a budget 6 months ago, it would have been in the 4s. Well, today they're in the low 3s. And again, it's simply because it costs so much more now to borrow money than it did 6 months ago. All right, so the last time I checked interest rates, we were, I don't know, 5.25. I don't know what they're doing today. I'm always asked, you know, are they going to come back down? I don't believe they are. I believe they may level out and stay put for a little while, but you know, everything is just so uncertain now. You know, you look at the economy, you look at the Ukraine, you look at gas prices, you look at everything that's going on in the country right now, and it really trickles down to buying a home at the end of the day, because all that is going to affect the Fed, the rates, the mortgages, that sort of thing. So bottom line here, guys, is you may have to reassess because you may not be able to afford as much home now as you could have 6 months ago. All right. On the good side of this, on the upside, well, property values here in North Alabama are still increasing, going up 20-30% over the last year or so. So even though you may be able to scale back the price you pay for your home, you're still going to get a lot of appreciation. You're going to build equity quickly, and you're going to enjoy, even a 5% interest rate now. And I tell this to people, that's not a bad interest rate. Granted, it's not 2 3/4 where we were, just 9 months to a year ago, but still 5, 6, 7% to borrow that money, even though it's more costly now, still is not a horrible interest rate. I remember back my first house I bought in 1988. I think our interest rate was like a 12% adjustable rate. And that was the norm back then. You didn't know any better. That was the norm. That's what everybody was doing, so it wasn't a big deal. So the big deal now really is coming as a result of interest rates being so low for so long. Everybody got used to that really inexpensive money, but again, now those days are gone. You're not going to be able to sit around and wait for interest rates or home prices to drop, because they are not. That's another question I get quite often is, okay, well, if interest rates are higher, it costs more to borrow money, are sellers going to reduce the price of their home? No, they are not. All right, especially here in North Alabama, we are still in a seller's market, 20-year low of inventory, not enough houses to go around. It really doesn't matter what the interest rate does. People are still going to need homes. It's still a seller's market. Sellers are going to be looking for a premium. All right, when interest rates go up, that does not mean sellers are going to lower the price of their home to satisfy buyers. It just means that they're going to bring in buyers who are looking for something a little more expensive, and now they've got to reduce their price to look at something else. So again, I think it's important to note that this is an incredibly volatile market. However, here in North Alabama, from a market stability point of view, I think we still have a very stable market. This is going to affect buyers on the front end. Now, one thing that will impact sellers is homes may sit on the market longer. And that's one thing that Lawrence Yoon mentioned, is you're going to see days on market increase. And we're seeing this already. Okay, homes in what I would consider the luxury market, $500,000 and above, are going to sit on the market longer. The buyer pool for those homes, is smaller than a buyer pool for people looking for $200,000 and $250,000 homes. So, you always have a smaller buyer pool for those high dollar homes, but I still think the demand is going to be there. I think the price is going to be there, but I think they may sit on the market a little longer. And if you're a realtor watching this video, you have to comfort your seller, because a lot of them have gotten spoiled. They're like us realtors. They look at the market over the last year and how houses all around them have been going, multiple offers way above ask. Well, they've come to probably expect similar, but the fact of the matter is those days are going by quickly. So you have to assure your clients, or if you're a person owning one of these homes, when you get in the upper ranges, here it's 450, 500,000 and above, just simply because of the price of your home and the interest rates now, the home may sit on the market longer. All right, and if you're an agent, one of your jobs is to keep your seller calm. And if you're a seller, one of your jobs is to realize that the market is changing, driven by interest rates, still driven by high demand here in North Alabama, seller's market, lots of buyers with money, but things are changing. Now, that does not mean we're going to have a crash. I do not think we will ever have a crash here. I don't think there's a bubble here. I say it over and over in my videos. It's not the same situation as it was back in 07. Because of our economy and our growth, we don't have a bubble. We really just have a shortage of homes. And that is what drives everything else. Shortage of homes, seller's market. Again, buyers are struggling already to compete in this market, and now the interest rates are going to force them to lower their sights as far as how much home they can buy. All right, so things are still crazy out there. It's still a hot market here in North Alabama. Again, we're going to see homes, especially in the higher price point, staying on the market a little longer, but I do believe they are still going to sell. It just may not happen as quickly. So, all right, guys, I just wanted to bring you that quick message because I'm getting a lot of questions about the interest rates, about the home prices, about the appraisals or the growth and that sort of thing. So I thought I would just kind of wrap all that up in one confusing video. And I think I've accomplished my goal. So, hey, guys, don't forget, if you like what we do here on the channel, do me a favor, click that little subscribe button, click the bell icon so you'll always be notified when we do another video. And if you are looking at moving here to North Alabama, give me a call. I hear from folks every day, just like you, moving from all over the country, all over the world. I've got clients in Germany coming in now, but they call me up. They want to know more about the market. They want me to start the hunt for them. We've got 85 agents now here at Revolved, so I've got an entire team of folks who can help find you the perfect home that you can afford. All right, so my contact information is below. Don't hesitate to reach out. Hey guys, that's it. I hope you enjoyed the video. I hope you have a great day, and I'll see you soon.